with the wonders of candlesticks or the ABCs of Japanese candlesticks. Now, candlesticks are a very old charting method that was developed by Japanese rice traders in the 17th century and made it to the Western world in the 1990s, or became popular in the Western world for the 1990s. Now, each candlestick represents a data set of complete price action during a selected time period. The time frames can be anything from a few minutes to a month. So each candlestick fully covers every bit of price action that occurred in that time frame. So if you're looking at a 15-minute chart, the candlestick represents 15 minutes of price movement. If you're looking at a one-day chart, it represents 1 day of price movement. Now, a candlestick is placed on a chart. Okay. And each candlestick incorporates the high, the low, the open, and the close for that time period. So what we do is at the open of that time period, so if we're looking at a 1 hour chart, at the beginning of the 1 hour, we draw a line across at the open. At the end of the 1 hour, we draw a line across at the close. We put a dot for the highest price and the lowest price that that asset traded at in that 1 hour. We then connect those dots to the lines, and then we connect the lines to the other lines. This forms what's called the body of the candle. And these lines, these little lines, are referred to as the wicks or the shadow. Now, if we step down from the open to the close, that tells us we had a bearish time frame. And in today's terminology, we use a red color to fill in the candlestick, which tells us that the markets fell during that time period. If the market moved up during that time period, we would color it in with green. And that would tell us we had a bullish segment for that time period. Now, we also still see a lot of black and white candles. And you can easily tell which are bullish and bearish. Back in the old days when I first started trading, we had to chart by hand. So you would draw your candlestick just like this, but before you'd color in your body, if it was a bullish time frame, you would just leave it white. If it was a bearish time frame, you use the side of your pencil and fill it in so you'd have black. Today, our Java charts and our HTML charts actually allow us, if we want to have pink and purple candles, we can have pink and purple. As long as you know which color you're using for bullish and which color you're using for bearish, it's completely up to you to use whatever colors you prefer. Okay. So let's go over to a chart and let's actually do this on a chart. So let me pop up a chart here. Okay, so we're looking at an old-fashioned bar chart. Let me get some of these lines off of here. We don't need trend lines at the moment. Okay, I'm just taking off these support and resistance lines I used for the previous class. Okay, so we're looking at an old-fashioned bar chart. Now, today's charts allow us to easily convert to a candlestick chart by just clicking on candles. Okay. And now we have a candlestick chart. Now also today's charts allow us to do whatever we want. So if we wanted to make the candles yellow and purple, we could have yellow and purple candles. But we'd have to remember which are bearish and which are bullish. As long as you remember which ones you set, you're perfectly fine. And we can set borders. We can make the colors of the wicks. You can make the wicks whatever color you want. It's completely up to you to set them as you would prefer. Now, the first thing we have to realize is that we are human beings, and the human element has a big effect on the markets, and it has a big effect on our psychology. And since we're human beings, when we see a lot of red, we assume that the chart or the candlesticks are telling us to sell or to, that things are falling. When we see lots of green, we think it tells us that we should be buying. But that's a falsehood. That's an assumption. Candlesticks have nothing really to do with the amount of red and green that you're seeing on your screen. Candlesticks are all about the size of the candle or the body, the length of the wicks, and the previous candle, the current candle, and sometimes the next candle, and also its placement within the trend, the current trend, and different positions of candles. Like, for instance, see these candles here? We have virtually no body. Okay. They tell us something. Not whether they're red and green, they tell us something because they have no body. Okay. Here we have absolutely none at all. That's called a doji. Okay, and there's names assigned to these types of candles. And when we see them next to other types of candles, they tell us something also. So we're looking at the size, the shape, and the placement or the position of the candle, not whether it's red and green. Now, see, for instance, here we have 4 green candles. Well, it happens to be that 3 candles in a row have a name and they tell us something, but it also has to tell us the length of those candlesticks and its comparison to the previous trend. So let's go on and talk about those. Now, I've also given you handouts that will help you with these. But remember, it's not about reds and greens. It's about shapes, sizes, and positions. So what does the size and the shape of a candle tell you? Well, first, it tells us the thing that all of us always want to know. And that's the story of the markets, the bulls versus the bears, the bulls versus the bears. Who's in control? Because that is crucially important. Now, there are 6 general stories that can be told. And I'm going to tell them to you like football teams, because I'm from the States originally, and I was a big football fan. So in the first example, we have a bullish candle, and we see it's a big wide body candle with 2 wicks above and below. So what we're seeing here is that the bulls controlled the ball, for most of the trading game. So in other words, it opened down here at the bottom. It did fall down to a low, but by the end of the session, the bulls were in control and were able to pull or push the ball pretty forward. The next candle is a bearish candle, and it's the exact opposite. So in this case, in 1, the bulls are in control. 2, the bears are in control. In number 3, we have small bodies, and it doesn't matter whether it's a red or a black or white or a green small body. In this case, because there is virtually no actual movement between the open and the close. So the small candlesticks indicate that neither team could move the ball, and prices finished pretty much where they started. And if you notice, we have pretty equal wicks or shadows. Now, number 4, 5, and 6 are generally the same story, except in 4, we can see at some point the bears dominated And this is why we were able to get such a low, but they weren't able to hold on and they lost control and price moved back up to pretty much where it opened. In 5, we have the exact opposite. The bulls were dominated at some point, but petered out and price ended up where it's at. Number 6, okay, we had lots of action. We had a tug of war where the left side team yanked hard and pulled everybody in, then the right hand side team pulled. We had lots of action, but at the end, nobody was able to gain any control. But price was very active in that time segment. So the long upper and lower shadows indicate that both the bears and the bulls had their moments, but the end was a standoff. So once we can tell the story of the fight between the bulls and the bears, we can then start looking at some of the actual candles. Certain candles have names because they tell us something. So one of the most well-known and one of my favorites is called a Marubozu. What can you see in a Marubozu? You see the bullish and the bearish. What do you notice right off the bat? They have no wicks. Because the bullish Marubozu is telling you from the minute that time segment opened, the bulls controlled that ball all the way to the very close of that time segment, and we're still in control when that time segment ended or that candle ended. So it most likely is going to tell you that the candle will continue running up in a bullish fashion in the next segment. Okay, but the bulls could peter out in the next session. But that's telling you that bulls were completely dominant. The red Marubozu tells you the exact opposite. The bears were in utter domination for that entire segment. So a bullish Marubozu can mean a continuation of the existing bullish trend or a reversal of the current trend. Now, remember when I told you when we were looking at the chart, a lot of it has to do with where you see a particular candle and where it appears in a trend. So when we see a bullish Marubozu appear at somewhere in a downtrend or in a congestion pattern, it's telling us that we have the beginnings of a very strong uptrend. During an uptrend or sideways moving market and a bearish Marubozu appears, that's telling us we have a strong downtrend beginning. Okay. Then we have spinning tops. Well, spinning tops look like those story of the bulls and the bears in my story. Okay. Spinning tops are candles with long upper shadows, long lower shadows, and small real bodies. Okay. Even though the session opened and closed with little change, prices moved significantly higher and lower in the meantime. Neither the buyers or the sellers could gain the upper hand. After a long advance, or a long previous white candle or green candle, a spinning top indicates weakness among the bulls and a potential change or interruption in a trend. After a long decline or long black candle, a spinning top indicates weakness in the bears. So when a spinning top appears in an uptrend or a downtrend, especially a strong trending market after a very positive candle, it's telling you that there is weakness developing in the marketplace. Then we have one of the most popular, and this is called a Doji. Now, a Doji has a set of rules that have been reconfigured because the forex market moves in such tiny segments. Because remember, a forex market trades in pips, which is 4 decimal points to the right. So a Doji used to be just the symbol on the left, where it was simply a cross. Now, a Doji indicated there was no price movement. The open and the close were virtually the same, with small moves up and down. That's telling you complete complete market indecisiveness. And when a doji appeared, it was very important. But when we found with online trading, especially with forex, to get the euro at 123.2945 and it closed at 123.2946, it was such an infinitesimal difference, but it was a difference that the doji would have this small, tiny body on it. So it was redefined so it can have a very, very, very small body, especially in the forex market. So if you're looking at gold and the market's open at 1250 and closed at 1251.50, okay, even though it might look like a doji, it isn't a doji because that's a big move for gold. Okay. Now, a doji is very important to look at in the relevance of the preceding trend and the preceding candlestick. After an advance or a long white candlestick, a doji signals the buying pressure is starting to weaken. After a decline or a long black candlestick, a doji signals the selling pressure is starting to diminish. Dojis indicate that the forces of supply and demand are becoming more evenly matched. So as you can see here, you want to see where the doji appears in comparison to the trend and the price move. So these are considered what's considered single candles. Okay. They're simplistic and never use one candle on its own to make a decision. A single candle simply gives you some indication of what is happening in the marketplace. Now, I've given you handouts. These candles, these show you single patterns, double patterns, triple patterns. But now that you have some basic idea of what candles indicate with their bodies and wicks, let's cut our teeth on some simple, uncomplicated candlestick patterns. These are fairly common and quite likely to appear before you in a normal trading session. So knowing instantly what they mean and how to take the proper decision could be important. Okay. Now, we have positions. Okay, I, as a whole, do not trade from positions, but we have something called the star position. That's when a candlestick is elevated above or below the last previous candlestick. Now, prices can't be separated because the open has to be equal to the close. But in this case, it's also the low, and the next candle looks like it's a star. It looks like it's floating above in the heavens. We also have shooting stars. These are an inverted hammers. These are simply complicated little patterns that you could get all involved with, okay, and get lost on the track. Some are important, some aren't. That's why I gave you the top level and the second level. But you should be aware of them and familiar with them. You don't have to remember their names. When you see a small body with a long downward where the bears pull down the price from it, it looks just like it's described. It looks like a hammer. A hanging man looks like a hanging man. But when they do appear, you have to look at them in relevance to the trend. You have to know that they're appearing and what is expected. So we want to see the hammer and the hanging man. Then we have harami. Harami is a very important position candle. It's made up of two candlesticks, but it's about the position of the second candlestick in relationship to the previous candlestick. Just like the other ones, they're all in relationship to the previous candlesticks. A harami in Japanese means pregnant, and that describes this two-pair position. A harami, the most current candlestick, must be fully incorporated in the body of the previous candlestick. So here we have the previous candle. Now, if you notice, the harami, the new candlestick, is fully encompassed, including the high and the low, within the body of the previous candle. So if you explain it just like you're talking about a pregnant woman, The baby must be within that body. It's not going to have his arm sticking out the ear or the leg going. Okay. It needs to be fully incorporated in the body. It doesn't matter if they're blacks or whites, reds or greens. Now, my rule of thumb is the harami, or the most current candle, must be the opposite color of the previous candle. But that's because I use very defined rules because I want to use them down to the utmost. The overall interpretation or the overall definition of harami means it could be either way. You could have white, white, or black, black, as long as it was fully incorporated. I'm sorry, just trying to get my markings. A harami is one of the most common candlestick patterns you'll ever come across, so it's important to recognize it, to understand what it means, and to understand its limitation. A harami is a two-session reversal pattern. It's made up of two candlesticks and implies that the price is about to turn. It is indicated by a small body of the opposite color. So we've talked about what? Building a candlestick chart, understanding and reading a candlestick, explanation of the shape and size, the formation of a candle, the position. We've talked about dojis and haramis, tops and shadows, bulls versus the bears, hammers and hanging men. That's a lot already. And to be honest with you, I don't expect any of you to fully get it. I mean, it takes people years to master this. It takes years to understand candlesticks and to be able to actually trade for them. Some people are experts. They can see every pattern. Okay. But understanding them doesn't take that long. But now it's time to learn about multiple candlestick patterns. And as I told you, it's a lot more than just reds and greens on a chart. Now, the little chart I'm popping up here on the screen, I didn't make up. I got it from, I think, Forex Factory or somebody had. So they've named them Lonesome Cowboys, 2 for Tangos, and 3 Musketeers. It's just something that the writer, the author, whoever developed the calendar came up with. I just call them singles, doubles, and triples. Okay. Single is one candle, is what we've been talking about. Marabuzas, spinning top, dojis, hammers, hanging man, inverted hammers, shooting stars. They aren't so reliable. They give you some warning. The duos, or 2 for tangos, they call them here, which is doubles, become very important when it's 2 candles that combine together to give you a pattern. Bullish engulfing, bearish engulfing, bullish tweezers, and bearish tweezers. Okay. So remember, I've given you the handout. It goes over the 16 most important and then the 16 second level. Okay. So bullish engulfing are a pair of candles that indicates an impending market reversal, which may be bullish or bearish. You'll see them on the handouts, and they're explained to you in examples there. When they appear, you need to understand what they are because they are fairly reliable indicators. Then we have bullish tweezers and bearish tweezers, I think are hysterical. Okay, they do happen now and then. They don't happen that often, but when they do, they're fairly reliable. It's a red and then a green bar candle, or a green and a red, depending if it's an uptrend or downtrend, with equal-sized shadows. No upper shadow, or virtually no upper shadow, and a long lower shadow. So they look exactly like a pair of tweezers. Okay. And then we have morning star and evening star. They're very complicated little patterns, and they're not so reliable, and they're very hard to notice. Okay. So if you want to spend time learning about them and recognizing them on charts, that's fine. And remembering the names, basically, I believe if you can just see the patterns, okay, you don't have to recognize what they're called. You have to only see what the chart is trying to tell you. Then we come to 2 very important triple candlesticks. And these are 3 white soldiers and 3 black crows. Now, technically, we could call them 3 green soldiers and 3 red crows because the names came from back in the old days when we were using black and white. Okay. The 3 white soldiers are 3 bullish candles that appear in a downtrend. when they appear, they are giving you a very, very, very good signal and telling you that the downtrend is over and the markets are moving into an uptrend. So if you're in that downtrend market, you want to get out quickly. If you're looking to enter the market, it's good giving you an entry signal. 3 black crows are just the reverse. Then we have 3 inside up and 3 inside down. Again, they're complicated little signals where in a downtrend you have a bearish candle, then you get an opposite color of a bullish candle, and then a second bullish candle, which the 2 candles together exceed the size of the previous candlestick of the previous move. And then the 3 inside down is the exact opposite. They're telling you that the current trend is also over. Now, when you've gone through all these various candlestick patterns, either you're ready to go trade in the battlefield with this newly acquired knowledge, and you haven't gotten enough knowledge yet to use it to make any trading decision, or you want to shout, "Stop it, I am too confused with all these funny names and shapes and can't remember any of these." So remember, observation and market sentiment. Each candle on a candlestick chart is a reflection of market sentiment. It is not just the standard patterns, but with keen observation, you can master the art of trading by looking at charts without even remembering the names of the patterns. The best is in combination with other indicators such as pivot points and support and resistance. You can trade with candles, only I will give you some guidelines and help you set some rules. And actually what I'm going to do is I'm going to try to make life a little bit easier for you. So I'm going to pop up our candlestick chart again. So let me go get that up on the screen here. Okay. Now, you're all saying to me, how am I going to recognize all of these things? How am I going to see them? How am I going to spend all this time doing it? Well, thanks today to charts, computers, and to Java charts and HTML charts, we can simply go up here if we're using TradingView or some of the other charting services, and we can go up to scripts, and we can locate one that will give us Japanese candlestick patterns. So here we found one, candlestick patterns identified. We can click on it. And now look at my chart. It's a mess. It's got all this red and green all over it. Tell me bullish, harami, bearish, engulfing, all the different patterns that are appearing on the charts. Well, first of all, it's giving me way too much information. So I can go over and I can format that. So as you can see, I've got to select first the different patterns I'm looking for. So and not only the patterns we want to see. So we don't care about evening star, morning star, shooting star. I don't want to see hammer. I don't want to see inverted hammer. I'll leave a harami on there. Bearish engulfing, but I don't want to see a piercing candle. I don't want to see any of this because it's just too much stuff on my charts. Do we want to see a hanging man? We don't want to see a dark cloud. Okay. So now we can also choose how we want it to appear on our charts. Do we just want a star on it? Do we want it above or below the price chart? Do we want it reds and greens? So you have to set it up first. It's not difficult. You can put it all in black so you don't see all of this. But now that we got some of the stuff off the charts. And remember, we're only really concerned with where we're trading. So we don't need to go all the way back here. So we can see that just an hour and a half ago, we had a bearish harami. See this? Whole price movement incorporated inside the body of the previous candlestick. So that wasn't so difficult. We've identified. Now we have to figure out what to do with it. Okay. That's one way. Another way, sorry, let me just get my drawings off of here and get my marker turned off again, is I'm going to go to investing.com, who's providing this class tonight along with Trade Time. We go to investing.com and we go under technical. we can go down to the little box that says candlestick patterns. And look at that. It's telling me all of these different candlesticks. Well, I can customize it. I can decide what assets I'm interested in looking at. I decide what time frames I'm interested in seeing the candles, whether I want completed patterns or developing patterns, whether they're bullish or bearish, how reliable I want those patterns. You know, like we go from singles to doubles to triples. Well, triples are the most reliable, doubles, okay. And then we can select the assets we want to monitor, and then we just click on apply. Now, what it's telling me is right now we have a bearish engulfing pattern developing currently in a 1 hour chart for XRP Bitcoin. And if we click on the line, it's going to explain the entire pattern, what it means, how it's seen, and everything else. Well, we don't need to do anything else right here because now we can go back to whatever charts we're using. If you're using the charts on Trade Time, you're using your own charts, you're using charts on TradingView, you can now locate this because the same, you know, if it's happening everywhere. It's not just happening on investing.com, it's happening everywhere. And you can see it, okay? And we can set up so we can see that, you know, a couple hours, 45 minutes ago, we had a 3 outside up. In gold, in the euro US dollar, we had a 3 outside up, and the euro US dollar. So these are 3 level patterns, okay? And it's telling us exactly what we want to do, and we can then go locate them on our charts. Not so difficult there. The other way we can do it is we just click on an asset and open up the screen for the asset. We can go to technical and go to candlestick patterns here. And this is setting up and showing us on the chart for the euro US dollar all the patterns that have developed. So we can see right now we've got a shooting star gap. It's a bearish reversal with a low reliability. Now we can also scroll down, and again we can customize it. We can say we're looking at the euro US dollar, and we can tell the system exactly what we want to see or watch for the euro US dollar, and apply. And then we're going to get all the patterns that happen through for that asset. So we can see on a 15-minute chart, we had this 3 upside down, which is developed in the last 3 candles, which needs to take 3 candles over the last on a 15-minute chart. That's giving us a very good bullish reversal, got a high reliability, and we're expecting the markets to reverse to the upside. So these are 2 easy ways that we can incorporate candlesticks easily into our charting method, because the hardest thing is seeing and recognizing and finding the patterns quickly. And so these are 2 easy ways that you can do that. And the stuff from the investing.com is only, you know, it's right there for you, and then you can just go over to your charts. So for instance, we see that there's a 3 upside down in a 15-minute chart for the euro US dollar. So let's go over to this chart. Let's go pull up the euro US dollar. I want to get these. Okay, we want a 15-minute chart. Okay, and we can see the 3 upside that developed right here on our chart. So all we have to do is take the information from here, and then transfer it over to our current chart. So this makes using candlesticks a lot easier and making part of your trading system. Sure, you still have to learn what to do, how to use them, what to do, but you no longer have to learn how to recognize them right off the bat. Because once you have them as part of your trading system, they can be very easily incorporated into your decision-making capabilities and will help you locate support and resistance zones. They'll help you draw trend lines. You can use candlesticks for a lot of other reasons besides just interpreting, because you can easily see the swing highs and the swing lows of the marketplaces, and you see commonality between different opens and closes to help you locate your support and resistance zones, and also how to interpret future action of price charts. So hopefully this gave you a little bit of information. You've got your candlestick cheat sheet, you've got your candlestick patterned top patterns, second level patterns, and each one you have the number of candles explained. I've given you all that in your handouts. Hopefully you're going to put the time and the effort into learning how to use candlesticks properly. And if you go to www.tradetime.com, they have an excellent library of videos and ebooks, and they also offer one-on-one training with a financial manager, and they'll help you learn how to use candles successfully right on their own platform. So thank you very much. Have a great trading night. Thank you for supporting Trade Time and investing.com. Talk to you again real soon. Good night now.